African trade contracted about 11.9% in 2020 as the coronavirus pandemic and restrictions to curb its spread pushed the continent into its first recession in a quarter of a century. A report shows that the greatest impact was on economies dependent on tourism and commodities, leading oil-producing nations where oil exports account for more than 90% of foreign exchange earnings and more than 60% of fiscal revenues were also badly affected. The pandemic also raised risk premiums, made it harder to access trade finance, and reversed capital flows, which exacerbated existing liquidity challenges and, of course, balance of payment pressures. Well, joining us to take apart the impact of COVID-19 on Africa's trade outlook is business, finance and trade investment analyst Mphoeng Mphoeng. Great to have you with us on the show, sir. Now, though this 11.9% contraction in trade was synchronized across Africa in 2020, we can also argue that regions such as East Africa did report improvements in trade, that of course due to increased intra-regional trading. At least that's what the data is showing us. What is your assessment on the extent of the impact of the pandemic on Africa's trade performance?
Good evening, Uche. We saw, as you mentioned, we saw that Africa suffered its first recession in 25 years, effectively really as a result of global trade contracting 9.2% in 2020. We also saw economic activity show sharp falls as a result really of the lockdowns and border closures. Those border closures restricted movement and they caused disruption in African trade, reversing the gains that we've been seeing in the past few years. All of these factors mean that African countries, which were largely undiversified, felt the biggest pinch of the pandemic. And we saw those, as you already mentioned, being countries that were dependent on tourism and export of natural resources, having the largest fall in growth as movement was restricted. Even banks, we saw banks across Africa really have an increase in demand for trade finance because the challenging business climate saw businesses have to go to banks in order to assist with the poor cash flow and working capital.
Now, of course, one thing that the report did indicate is the fact that COVID-19 has worsened trade finance difficulties in Africa. Now, how badly do you think the financial shock and, of course, the resulting instability has, of course, impacted the financial services sector across Africa, going forward especially?
We effectively saw two impacts. So the first one we saw was really that the pandemic caused an increase in risk perceptions in the expectation that most economies would actually suffer in 2020. This is obviously was made worse by the inability to know how long this recession will actually last and how deep it'll be. So we saw banks brace themselves for increased risk, business failures and bad debts. And this forced credit teams to therefore tighten their conditions and reduce appetite for lending, which was actually quite bad because that meant that they couldn't give out business loans to businesses, which effectively reduced at a time when those businesses needed financial support the most. So that exacerbated obviously the recession. The second impact that we saw was tighter global financing conditions, which triggered massive capital outflows from Africa due to the same risk perceptions and a flight to safety. This resulted in reduced liquidity in the market, and therefore we started to see widening interest rate spreads, which led to capital being a lot more expensive and shutting down a lot of borrowers out of the capital market. And I think in the past few weeks, as results have come in from different banks listed on stock exchanges, we've seen a lot of poor performance and stock prices dropping.
Now, coincidentally, COVID-19, of course, coincided with the implementation of the Africa Continental Free Trade Area Agreement. Some experts say this pandemic could help speed up Africa's integration agenda going forward as it pertains to trade. How much do you expect to see the AFCFTA impact a rebound in trade this year on the continent?
I agree with the statement that you made, Uche. We've seen Africa expect its GDP growth to grow by about 3.4% in 2021 as we start rolling out the vaccines and we start to seeing a lot more trade. Unfortunately, though, this will be the slowest growth of any region in the world, largely because the vaccine rollout is slower than in other regions. We should also see a recovery of debt levels across Africa, and this should help trade and increase regional trade. So we should expect to see banks get back into the business and starting to assist with a lot more trade financing. The good thing is that COVID has forced governments to interact and benchmark with each other, and we've also seen a lot of innovation in businesses and policy making. So you've actually seen a lot of the development financing institutions being forced to innovate and quickly unveil new facilities. So all of these innovations that have been forced by COVID have forced regional financial institutions to integrate and remove a lot of bureaucracy, and this will bode well going forward. So what we have seen is COVID has forced the economies to become a lot more efficient, moved a lot more towards being digital, and this should propel them to grow faster as we get into a more data-driven society that should move Africa towards digital trade and e-commerce much better.
Quite interesting. Well, we do have to leave it there, Mphoeng. Thank you so much for joining us on the show today. That, of course, was Mphoeng Mphoeng. He's a trade analyst.